everybody. Vitale Wealth Management here with the Gradient Investments Weekly Market Update. All information is gathered as of the week of May 12th, 2025. We hope that everyone had a wonderful, all you mothers had a wonderful Mother's Day. And we're getting some nice warm weather now. So looking forward to that. And as the graduation season starts hitting, and welcome into summer. Let's talk about the weekend review. Major U.S. indexes posted modest losses last week. The S&P was down 0.45, the NASDAQ 0.26, the Dow dropped 0.14. Now, value stocks, which is the Russell 1000, outperformed growth stocks, with the former gaining 0.01, while the latter fell 0.61. After 2 consecutive weeks of decline, gold rebounded last week, rising over 3% and extended this year-to-date lead. Another notable was Bitcoin, which climbed back above 100,000. If you remember, was down quite considerable, under 80. Threshold for the first time in more than 3 months, and it was around 6% for the week as of Friday. As anticipated, the Federal Reserve left interest rates unchanged. Following last week's meeting, Fed Chair Jerome Powell expressed continued caution in light of trade-related uncertainties and noted that the risks of higher unemployment and rising inflation have increased. Really should have dropped. We need to start seeing rates go down. Inflation is coming way down, so everything is in check. He really needs to start cutting rates a quarter to a half. That definitely is going to help things as well, but things are starting to go in the right direction. Upcoming economic releases. This week brings several key economic reports on inflation and consumer strength. We've already seen the CPI number come out yesterday, which had fresh insights on inflation trends. The numbers came back, and we'll talk about that next week, of course, but the numbers came back better than expected. So the market had a little rally with that. On Thursday, which is tomorrow, the PPI, Producer Price Index, will offer a look at inflation from the producer side, while retail sales data, also released that day, will offer insights on the health and resilience of the U.S. consumer. You will also note, again, we're going to talk about it next week, we had this deal with China now this week happen on a 90-day pause, reduce the tariffs, which caused the market to go crazy, rebound. So basically everything that happened a little over a month ago, we're pretty much even now where the market is. A little bit of market outlook. Stocks market opened in the green on Monday morning after trade deal was negotiated between U.S. and China. This comes after U.S. announced a trade agreement with the U.K. earlier last week, further signing ease trade tensions. Now, earnings season is winding down. So 90% of companies have reported their quarterly earnings as of Friday last week. So far, earnings have exceeded expectations, with 78% of companies reporting results above forecasts. And the overall earnings growth rate for the first quarter now stands at 13.4%, which is a significant improvement from the 7.1% expected at the start of the season. Remember, we talked about that. Earnings makes the market. When corporate earnings are good, the market's going to go up. So that's why we've been seeing, and the earnings are still good regardless of all the naysayers out there. This week, investors will remain focused on the potential for further progress in trade negotiations, as well as key economic data, offering insights into inflation and consumer spending. So that's what's happening right now. We are a lot of things, and that's the one thing. The market is the market. We can't watch it every day. We're going to have to just take it easy, relax, not watch it every day, make sure we got everything in the right position and let it go. But make sure we're poised for growth and safety. Recent activity in the Gradient portfolios, there was no changes. So, they rebalance every quarter, make sure we're in balance. Unless the stock changes, then we have to take care of that. Stocks in the news, Ball Corp, which is in the G50, it's a packaging company, reported stronger than expected earnings last week, driven by higher volumes across all segments. The stock gained 2.28% for the week. How about Toyota? TM, which is Toyota Motor Corp, owned in the G40I, which is the world's largest automaker, reported its earnings last week and noted that tariffs are expected to cost the company $1.3 billion over 2 months, and it's projected a 21% decline in the profits for the fiscal year. The stock was down only 4.46% for the week. So not a big hit, even regardless of that, because guess what? It's still making money. And the profits are still pretty good. So really not too concerned with that. And of course, there are a lot of tariff negotiations. So we're going to see a lot of that dissipate and a lot of that get corrected. So that's it we want to say congratulations also for all of our graduates out there from high school and college. This is graduation season. My one of my daughters actually graduated from Franciscan in Steubenville, so in nursing. So we went down there last week for that. And I'm sure everybody's got the same thing going on with kids or grandkids. So awesome time. So that's it for this week. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, 855-756-5700. Visit us at vitalewealth.com. That's it for this week. God bless you. We'll see you again next week.